Hello everyone, welcome to Razer First Half 2020 Earnings Webcast. Let me introduce the management team who will take you through today's presentation. We have our co-founder and CEO, Liang Tan, CFO, Chongnam Tan, and CSO, Liming Li. During today's presentation, Min will start by discussing the earnings highlights. Liming will walk us through Razer FinTech updates, and Chongnam will take us through the financial highlights. Min will then conclude with Outlook. After that, we'll open the floor to questions. For the participants joining our webcast, you can post your question via the chat box function at the bottom. For participants joining via dial-in, please send your question via email to ir@razer.com. Before we start, we would like to remind you that the presentation includes forward-looking statements and some unaudited non-GAAP financial measures. Please read the disclaimer on the deck. I must also advise you that this presentation is being recorded today. Min, over to you. Thank you.
Right, thank you very much, Canny. So it's good to be here. I hope everyone's staying safe at this point of time, and I'm going to kick it off straight away with the highlights for the first half of 2020. Here we go. So here are the key highlights. First up, we've seen record high revenues of $447.5 million, representing about a 25.3% year-on-year growth. We've beat expectations, I think driven primarily by the dominant brand position that we have here at Razer. We've seen the user base expansion really drive a lot of this record high revenues. And of course, the stay-at-home trends have really contributed to a great extent to the highest revenues we've ever seen for the first half. Now, it's not just the revenues that have done well for us. Over and above, we've seen the bottom line improve. We've seen the gross profit margins improve to 22%. And this is contributed primarily by the increased services contribution. Now, bear in mind that for the first half of the year, we saw an increase in freight costs, a significant increase in the freight costs. And pretty much this was to facilitate the surges in the demand for our products. But even with the increase of freight costs, our gross profit margin still improved. Now, thirdly, and this is something I think which is pretty exciting for us, we've now turned profitable for the first time since the IPO, where we've got positive adjusted EBITDA of $3.2 million. And this is ahead of schedule, and this has beat expectations out there. And this has been achieved, the profitability has been achieved fueled primarily by the exceptional revenue growth. And of course, the continued improvements in terms of cost efficiency within the company. Now, it's not just, I think, in terms of a much better bottom line that we have at this point of time. We're also seeing our balance sheet get even stronger. Cash flow from the operating activities turned a positive to $66 million, with operating profit growth and strong working capital management really leading to record cash conversion cycles. And finally, I think as we closed off the first half of the year, we've closed off with a really, really strong balance sheet. We've ended up with no debt at all and a cash balance of over $500 million. And this truly will help us not just invest in the future, but also help us weather the uncertainties of the pandemic environment. So let me jump in greater detail in each of these key highlights. And let's talk about the record high revenues that we've achieved in the first half of the year. Beat expectations, as I've mentioned, primarily due to the stay-at-home trends. I think we gamers were made for staying at home. And pretty much you can see the trend between from the first half of 2018 to the first half of 2020. And year on year, we've seen a 25.3% increase to a whopping $447.5 million of revenues. And how did we achieve this? First up, it was through strong growth across the entire peripherals portfolio, and we've maintained our market-leading position globally. Secondly, while we were kind of affected, I think in terms of supply in the early part of the year for the systems, we saw a huge double-digit percentage year-on-year growth for our systems in May and June when the new Blade laptop series launched, and it's launched to great fanfare. It's been called the best gaming laptop in the world, and it's done incredibly well for us. And of course, it's not just the hardware business that's done really well for us. the services business has done incredibly well for us at this point of time. We've seen phenomenal growth in the services business, driven by surges in Razer Gold usage and Razer FinTech B2B activity, which my colleague Liang will take us through in greater detail afterwards. So coming to gross profit margin, we've seen improvement of about 80 basis points year on year, and this has been driven primarily due to the growth in the services business, and gross profit contribution of the services business to the group has grown to about 30%. And bear in mind that this is despite the increase in logistics costs that has affected the world at this point of time. I mean, we're looking at air freight costs going up through the roof, and despite that, we've managed to even improve upon our gross profit margins. And of course, turning profitable way in advance of the timetable is great for us. We've beaten expectations to achieve a positive adjusted EBITDA. And as you can see from even in the first half of 2018, we were seeing a loss of about $22 million, a loss of about $20 million in the first half of 2019. And in the first half of 2020 alone, we've now achieved positive adjusted EBITDA and achieved profitability. And of course, it's not just profitability, but we've also seen positive operating cash flow and record cash conversion cycles. And we've provided a bit of a trend for you to look at historically where, in the first half of 2018, we have negative $33 million, first half of 2019, negative $54 million. But in the first half of 2020 alone, we've added $66 million of cash into our balance sheet. And of course, we've seen a record, and we're talking about records for the entire first half of 2020, and in respect of this, a negative, and of course, lower is better for cash conversion cycles, a negative 72 days of cash conversion days. Incredible. And as I round this whole thing off in terms of the key highlights for the first half of 2020, we end the first half of 2020 in an incredibly strong position. We've got a fantastic balance sheet. We've got no debt at all and over $500 million in cash. And I'll talk a little bit about how we intend to invest some of this cash a little later. But what is important to understand is that despite all the uncertainties that we're seeing in the world at this point of time, we are strongly poised to weather the uncertainties of the entire COVID-19 pandemic environment. So those are the key highlights, I think, in terms for the first half of 2020. In short, a truly remarkable first half for ourselves and for our shareholders. So let's talk a little bit about the Razer ecosystem and how it grew in the first half of 2020. But before I kind of jump into the nuts and bolts of our ecosystem that many of you are familiar with, the Razer hardware, the Razer software, the Razer services, I want to take a bit of a pause and chat a little bit about how we've done or how COVID-19 has really affected the gaming as a whole. Well, in short, it's really fueled growth in gaming. We've seen record surges in terms of gaming activity, myself included. 82% of gamers in the first half of the year have spent more money on gaming than ever before. We've seen an 80% increase in total hours streamed on Twitch, 75% increase in gaming traffic during peak hours, and in short, we're just seeing more and more gamers at this point of time. As many gamers joke amongst ourselves, we were built for this. So let's jump into the ecosystem that we've built at Razer. And at this point of time, I really want to kind of take a step back. I think for some of you who have just joined us, to kind of chat a little bit about the ecosystem. Remember, we are a truly unique company in the sense that we are not a hardware company. We're not a software company, nor are we a services company. We're pretty much all of the above. And right at the center is really our motto: for gamers, by gamers. And when we talk about gamers, today I think there are over 2 billion gamers out there in the world. I've seen reports even very recently claiming that there are about 3 billion gamers in the world. And what is clear is that there are more gamers now than ever before. 2 billion, 3 billion gamers. And what we built at Razer is something truly, truly unique. We've got hardware. We make some of the best gamer hardware in the world. We've got a massive software platform where tens of millions of gamers are daily logged on to our platform. And then, of course, we've got our services that builds on top of this hardware and software platform. And today I'm just going to go into greater detail of how our gamer ecosystem has grown during the first half of 2020. So let's chat a little bit about hardware. So we've seen some truly solid revenue growth for our hardware business. In the first half of 2018, we were only at about $240 million of revenues. Today, we are at $382 million in terms of revenues for our hardware. And that represents a 26% year-on-year growth, a truly phenomenal growth for our hardware business. And we continue to be the dominant brand in gaming hardware globally. And if you look at NPD data and we look at gaming peripherals, for example, where we would look at mice, gaming keyboards and gaming headsets, essentially in a single line, we have got number one market share in the US at this point of time. And it's not just peripherals that we have got dominant market share. We've also truly grown the Razer Blade business, and we like to call it the systems business. We're also the number one premium gaming laptop in the US. And today, our footprint grows globally, and we continue to grow our hardware business as it stands. So that's how our hardware business is done. Truly great. Now let's talk a little bit about the software. And remember, when we talk about the software that we design or develop at Razer, we're talking about a layer that allows us to continually interact with our customers to create a relationship that allows us to understand so much more about them and serve up better products and services for them. So how did we do? Well, we've seen a true acceleration in terms of user base in the first half of 2020. And this has been boosted primarily by increased gaming activity, esports, a lot of which of the activities have all moved online, and live streaming activities. And we're talking about all new ways of live streaming where gamers are now getting more engaged, more so than ever before. And what has happened? Well, at the end of the year, in December 2019, we had about 80 million users. And in the middle of the year, this year in June 2020, we've now got about 100 million gamers on our platform, making us one of the largest software platforms for gamers out there. And this represents a whopping 42.8% year-on-year growth. And it's not just total users that have come on board our platform. As I've mentioned before, we've seen gaming activity just go through the roof. So MAU, or monthly active users, we've seen about a 45% increase year-on-year just for the first half of the year alone. So that's hardware, which we've done really well at. Software, we've seen an exponential increase in terms of users to 100 million users. So what about services? And remember, services for us, we've got Razer Gold and Razer FinTech. Well, we've seen some truly phenomenal growth in our services business, driven by surges in Razer Gold usage. Lots of gamers are now buying a lot more game credits, and they're spending more in-game. And we've also seen Razer FinTech with a huge surge in terms of B2B activity. Bear in mind that in 2018, it was just $17 million of revenues for our services business. Year-on-year growth of about 80% from 2019, we are now at $64 million for our services business alone. So that's been truly great growth for ourselves for services. And what is important to kind of understand about our services business is that it's got really high margins for us. So it's a margin accretive business. And we've seen the increased gross profit contribution to the group of about 30%. Back in just 2 years ago, it's just 14% of our gross profit contributions, then 20%. And now in 2020, it's about 30% of our gross profit contributions. And when I mention that we're truly an ecosystem, that's where I think many of our investors are slowly understanding we're much more than just a hardware company. We're an entire ecosystem, because bear in mind, services alone has a much higher margin than our traditional hardware business. We're talking about a 46% GPM just in the first half of 2020. So a little bit more about Razer Gold. Well, Razer Gold, in short, is pretty much the choice partner for many game companies out there. And what is Razer Gold? Well, It's really that definitive virtual credit that many game companies out there rely on to monetize, I think, gamers out there. We provide that channel to allow gamers to be able to pay for game credits, for microtransactions. And today, Razer Gold has over 4 million channel touchpoints across 130 countries and expanding. And that's what we want to do. We want to help gamers have a convenient, useful, safe way of being able to pay for games and other digital entertainment online. And what has happened in the first half of the year? We've seen total payment volume, or what we like to call TPV, increase by 125.9% year on year. That's an incredible increase. And a lot of this, of course, is driven. And this has hit new records for our content partners, of which we are helping them monetize at this point of time. And for high ARPU users, or high average revenue per user users in the first half of 2020, we've seen a threefold increase in transaction volume. And that's just incredible for our partners. So how has the channels grown? Well, we now have over 4 million global channel touchpoints, and the team has been working incredibly hard. And bear in mind, we're talking about over 1.3 million channel touchpoints in, for example, South America. We've got in the EMEA or Europe, we've got over 1.2 million touchpoints. Southeast Asia, over 1 million channel touchpoints. And just in the first half of 2020, we added 600,000 additional new channel touchpoints. And some of the new ones, I'm sure you've been hearing, depending on which city you are in, whether you're in the US or, for example, in Hong Kong, we just announced a partnership to get Razer Gold into Fortress. We are essentially expanding these channel touchpoints everywhere at this point of time. And it's not just channels that we're making sure that we make it so easy for gamers to be able to purchase digital content. We've onboarded some really new popular content with Razer Gold right now. We're talking about things like Ragnarok Online and one of the mega hit games at this point of time, Call of Duty Modern Warfare. We've also enabled Razer Gold. And, you know, today it's not just gaming at this point of time. We're talking about all kinds of entertainment digital content. We've, in light of the pandemic, we've also started doing partnerships with our partners like Bigo Live to bring cloud clubbing and tipping, I think, online. We're seeing anime with partners like Comico to bring their entertainment content to the 100 million gamers out there on our platform. In short, today, we've got over 33,000 digital entertainment titles on board Razer Gold and growing. So, and this is essentially what we've done. We've grown the channels, we've grown the content, making Razer Gold that definitive virtual credit, that definitive platform for gamers to buy or to do microtransactions on. So at this point of time, I think I've spoken about how exciting the Razer Gold business has been for our services business. So I'd like to hand this over to Liang, who's CEO of Razer FinTech, to talk a little bit about how we've done in the first half of the year for Razer FinTech. Liang?
Thank you, Min. So I think diving straight into the themes surrounding the Razer business, so we've seen the same themes come across to the Razer FinTech business. We've seen a huge growth in our total payment volume, TPV, really driven by new merchants being onboarded onto our platform. I think during COVID-19, many of the businesses were looking to digitize and make sure that they can continue their businesses. We've seen surges in online shopping and digital entertainment consumption, where we are really supporting some of the biggest platforms across the region to fulfill their payment needs. So if we look at the specifics, it's a business that we've been growing over the last couple of years, $869 million TPV in 2017. We grew it to $2.1 billion in 2019. In the first half of 2020 alone, we have seen this number grow even bigger. 828 in the first half of 2019 to $1.8 billion just in the first half of 2020, a growth of more than 114% year on year. So that business has been doing well for us. We continue to work hard and bring more merchants on board. And I guess the next key area, I think there has been quite a lot of questions after we announced that we've applied for the digital banking license here in Singapore. Wanted to spend a little bit more time talking about it. What we are trying to do here is really to build and redefine banking for the youth and millennials globally, relying on the following key strengths of the business. Number one is the global youth brand, as Min has talked about it. As you follow our social media, as you follow our product launches, etc., you will see that the Razer's brand authenticity are able to attract, retain, and create trust with the youth millennials. And this global brand continues to be even stronger as we grow the business into new geographies, especially things like Razer Gold. Deep understanding of the youth, you need to know who you are targeting. I think the keen understanding of the youth psyche and the ability to engage with them daily and customize and tailor products and services for the youth who we see as hugely underserved, people who are distrustful of the existing options that is available to them. And we see that once we are able to bring them on board, they will become our ambassadors and really our long-term customers. I think the other thing that we have heard along the way is, what is a gaming hardware company trying to get into a bank? I think this presentation and the numbers that Min has gone through to show that we've really truly created an ecosystem. And also the fact that the fintech business continues to grow exponentially. It comes from the fact that we already have the extensive technology and fintech expertise that we continue to build, and we are ready to be able to deliver the promises and the aspirations that we have. But we also know that we can't do everything alone. There is a interest for us to be able to produce a product and a service out of the Razer fintech ecosystem towards the bank. So we've obviously brought in like-minded investors and partners to build up that ecosystem as we look at building the bank. We've also announced a slew of technology partners that will come in from day one if we get the digital bank license here to really build out the value prop that we are talking about. And obviously to build a global business, we will rely on the global reach that Razer has with about 16 offices worldwide and 100 million and growing users globally. So we're looking at this really not just as a Singapore business, even if we get a Singapore license. We're not just looking at it as a Southeast Asia business. We're looking at this as a global business from a business perspective. So while we're waiting and pending the Singapore digital banking license application decision, we are concurrently now exploring digital banking licenses in other jurisdictions. I think, when we went live about our interest, not just that we have partners across the globe reaching out to us, we also have regulators who have approached us and asked us if we are keen to roll out the digital bank business in their country. So we're actively engaging with these. It really depends where we get started, but we're really raring to go to start this ball going. So without further ado, I will now pass it on to Chong Neng, our CFO, who will walk you through in more detail about the financial performance for the first half of 2020. Thank you.
Hey, thank you, Liang. A very good evening to all. Despite the global uncertainties caused by COVID-19, we kickstart the first half of 2020 with a strong top line and bottom line performance. From net revenue perspective, our overall top line grew 25.3% year-on-year to 447.5 million. In the first half of 2019, we still have the mobile handset business, which is exited fully at the end of last year. If you strip this out and compare apple to apple, our organic growth would have been 30.8% year-on-year. The growth this year has been broad-based, as our hardware business, consisting of peripherals and systems, grew 26% to 382.7 million. Importantly, we continue to lead the market as our gaming hardware recorded increasing market share gain across all the 4 regions, a demonstration of strength of our dominant brand presence and established channel network. Our services business, consisting of Razer Gold and Razer Fintech, grew 79.3% to a high of 64 million. At 64 million in the first half, we had already achieved more than 80% of how much we have recorded in the whole of 2019 of this very important segment of our business. Our user base recorded solid growth of 42.8% year-on-year as we continue to invest and grow the Razer ecosystem, enriching our users' gaming and streaming experiences. Razer Gold, one of the largest virtual credit for digital entertainment, achieved a record high TPV of 125% year-on-year growth as we entrench our position as the partner of choice for the content providers. At the same time, we expanded our geographical reach and added 600,000 channel touchpoints. These strategic initiatives establish a strong runway for our partners and Razer Gold to continue this hyper-growth journey together. Razer Fintech continued to outperform and generated a strong TPV of 1.8 billion, an increase of 114% year-on-year. The increase is achieved not just due to the surges in online shopping, but importantly by the onboarding of new merchants as we continue to build our infrastructure and network. Overall, a spectacular top-line achievement as we grow 25.3% year-on-year. Moving on to gross profits. Our gross profit dollars grew a strong 30% year-on-year to 98.5 million, driven by both the top-line growth of 25.3% and the 80 basis point improvement in the overall GPM percentage. One of the key strengths of the Razer ecosystem is that our growth engine can be firing up from the different aspects of the ecosystem. During this period, our services segment grew. Importantly, this segment contributed up to 30% of the overall group GPM percentage, the dollars, compared to last year this time when it made up 20% of the group GPM. One of the side effects of COVID-19 is that it has driven up the freight cost of all businesses, and despite this significant cost increase, we have managed to improve our overall GPM percentage. This is a strength of our business mix, our ecosystem. And concurrently, we have also mapped out key supply chain initiatives to ensure we proactively reduce the freight cost component moving forward. And this will help pave a way to further GPM improvement as the freight costs normalize. Operating expenses. We continue to drive efficiency in our OPEX deployment. We stay focused in cutting our lean and effective cost structure, and we are beginning to see the fruits of the various initiatives implemented over the years. We see the OPEX to percentage of revenue improve by 650 basis points from 30.4% to 23.9%. And we continue to support our hyper-growth with an effective cost structure. This proactiveness and disciplined approach with initiatives implemented pre-COVID allow the Razer team to stay focused in developing great products and helping our channels win market share during the COVID period itself. Adjusted EBITDA. In our last earnings update, we alluded to a path towards profitability. With the strength of our brand, market share gains, and user base expansion, our revenue grew. With our gaming ecosystem, unique business mix, the hyper growth of the higher margin service segment, our GPM percentage improved. With our discipline, our focus to cover an effective cost structure, our OPEX to the percentage of revenue improved. With this, our adjusted EBITDA turned positive to a profit of 3.2 million for a loss of 20.6 million. Working capital. We are one of the best in class when it comes to working capital management, and we continue to improve during this cash crunch period. As Min had highlighted earlier, we generated positive operating cash flow, 66 million more in this difficult time. Our cash conversion cycle had improved to negative 72 days, meaning our revenue had been converted to cash even before the payments outflow, a reflection of our working capital efficiency. Our days inventory outstanding, trade receivables turnover days remain almost constant as we stretch our working capital to support the business growth. To sum it up, strong top-line growth of 25.3% year-on-year during this challenging time, strong bottom-line performance as we turn adjusted EBITDA profitable, and lastly, we increased cash as our working capital continued to outperform, and end this period with more cash and zero debt. With this, we'll hand over back to me.
All right, thanks a lot, Chong Neng. So, in short, I think we've had a spectacular first half of 2020. And what are the key things? Of course, we've had record high revenues of $447.5 million. Great revenue growth, I think, year on year, despite the challenging environment out there. We've seen, us turn profitable, beating all the expectations out there, and with positive adjusted EBITDA. And of course, a really, really strong balance sheet. And that's for the first half of 2020. So what about the entire full year of 2020? Here are the key takeaways and expectations. First up, the Razer ecosystem of hardware, software, and services, we expect it to continue to grow. We expect to have sustained market share leadership. We are number one, I think, in many of the categories worldwide. We expect to have sustained market share leadership. And how do we plan to do that? It's because we've got some truly great new products that we're launching in the second half of 2020. Very cool. I'm super excited about it. And I believe our fan base will be looking forward to it too. We also expect exponential growth or continued exponential growth in terms of the software user metrics. Remember, we've grown to 100 million users on our software platform. And what is important to really look at the software is that it provides us this massive scale to upsell even more great products from a hardware perspective and sustain the phenomenal growth of the services that has come through to pass at this point of time. So we expect our Razer ecosystem to continue to grow. Now, what else? I think for the full year of 2020, we expect to have continued outsized revenue growth, driven by the hardware in the second half of the year. As I've mentioned, I'm sure there's a lot of excitement of what we're going to be launching, and I think I'm personally very excited about it. And of course, we expect our services revenue, Razer Gold, Razer Fintech, to be supported by the ongoing growth momentum from all the stay-at-home trends. So in short, I've heard many people call Razer, we are stay-at-home stock. Well, essentially we are, because with more people, staying at home with gaming activity going up, we've seen this outsized revenue growth that we expect to continue through for 2020. Of course, as we improve the top line or the revenue, we also expect continued improvements of gross profit margin. Why? Well, we look at the hardware margins, the high margin services business growing as part of the revenue mix of the Razer ecosystem. So that's really where we see continued improvements to the gross profit margin. And ultimately, we also see continued improvement. We expect us not just to have turned profitable in the first half of 2020, we expect us to be even more profitable for the full year of 2020. Now, having achieved a positive adjusted EBITDA in the first half of the year, we expect this exceptional revenue growth to continue to drive the bottom line. Now, all those profits are good, right? It all adds to, positive cash flow. We've got, as I've mentioned, we've got a really robust balance sheet of over $500 million. What we want to do is we want to take these profits, we want to take, a lot of the cash that we have, we will continue to lead the market. We invest in R&D investments in new hardware categories. We've got lots of ideas. Our community has lots of ideas for gamers, by gamers, where we can extend our design and engineering capabilities to. We will continue to hire the very best talent out there to help us create truly exciting new products, truly exciting new services for us to bring to the gamers globally. We do see ourselves as incredibly undervalued, I think, at this point of time. So we will be continuing our share buybacks, I think, moving forward from here. And we will be opportunistic in terms of investment and M&A activities, where we're seeing some truly great startups that we can invest in, or companies that we can bring into the fold and expand our business at this point of time. Definitely, we've got many options at this point of time, having no debt and a lot of cash and a war chest. And that's stuff that we want to do. Invest in the future, grow the company, and really have this outsized revenue and profit growth. So net, those are the key takeaways for full year 2020. And I'll hand it over back to Canny to moderate the Q&A. Canny?
Thank you, Min. For the participants joining our webcast, you can post your questions via the chat box function at the bottom of the screen. For participants joining via a dial-in, please send your question via email to ir@razer.com. First question, can you provide the GPM by segment over the next 3 years? In terms of the services segment, can you provide the split in terms of contribution between Razer Gold and FinTech? And do we see any normalization in terms of growth trends for these two businesses? Thank you.
Hey, good evening, Chongna here. We will continue to do what we do best. For gamers by gamers, we will invest in great products. And actually, as you can see, as we continue to gain market share, we actually grow. With the economy of scale, our GPM improves. So that will be the focus. And we do see this trend going forward as we continue to invest in great products and our channels. And with economy of scale, GPM will improve. So we do see this trend moving forward. And importantly, if you look at it, with the economy of scale, beyond GPM, is the overall profitability of Razer as a whole. With the improvement in OPEX to percentage of revenue, our adjusted EBITDA to a percentage as a company actually improved up to 650 basis points, above and beyond the GPM percentage that we typically look at. But we do see an improvement trend, especially for this first half of the year. One of the key factors that affected the GPM is actually the freight cost. From macro environment perspective, we actually see freight costs coming down for the past few months, and this will actually improve the GPM. And as mentioned earlier, we have taken key supply chain initiatives to reduce the freight cost, and this will actually help GPM as the freight cost normalize going forward. In terms of services, one of the key things is, during this period, it's not just the activities that increase. We have been building our infrastructure, our geographical expansion, our channel touch points. And with this increase, you actually see that services will continue this hyper growth. And with hyper growth, GPM will actually continue to improve. The exciting and fun part is which one will grow faster. Will the peripherals, the systems outperform the services? We hope both will continue to grow. But in terms of mix, in terms of this contribution, we do see services outperforming the dollar contribution or the rate as we move forward. Thank you.
Thank you. The next question. Congratulations on the strong results. What's the management expectation with regard to the outlook for second half 2020 and 2021? Can the management please provide color on full year 2021 outlook, given the strong performance in 2020 and high base comparison?
So I'll take the question, I think, in respect of that. I've actually dealt a little bit about second half of full year 2020, and if could we just flash back to the key takeaways for 2020, if you don't mind? Great. So as I've mentioned, we expect to see the full year 2020, and of course, as a extension of second half of 2020, to provide this outsized revenue growth. So we expect this to continue for the full year, and this is where we see improvements in terms of top line, improvements in terms of bottom line, and this huge growth momentum of additional gamers who have stayed at home. Now, it is at this point I would probably point out the nuances which will affect, I think, our outlook to 2021, where if you think about it, we've actually seen a lot of increased gaming activity, primarily from the existing gamers at this point of time, right? So gamers are staying at home, they're playing a lot more games, so on and so forth. Now, the second nuance that to be kind of be aware of this is the fact that we have seen an acceleration of new gamers coming on board. And this is something which we've realized that we've seen a lot of gamers, new gamers come on board, and we do expect to see this sustained growth of the whole gaming market, primarily because there's just so many more gamers at this point of time. As I've mentioned, very recently, even DFC Intelligence, I think they published a report to say that there are now 3 billion gamers out there. Now, whether it's 2 billion or 3 billion gamers, it's just a massive amount. Now, a couple of things that we are able to see, I think much more than most of the other companies, is that we've got this massive software platform where we can look at gaming activity. So one of the things that we've done is we are able to slice and dice activity to see, for example, certain markets that have started opening up, right? And you would probably assume that if the markets open up, gaming activity may come down because more people are going out and stuff like that. It's actually on the contrary. We see sustained gaming activity even as markets go up because people are still cautious. I think that's one. But secondly, we're seeing all these new gamers that have come on board, gamers who probably in the past wouldn't be traditional gamers in the first place. They've now come on board, and all of this is this massive growth engine pushing ahead and helping us get to that point. So pretty much, we remain cautious. We are enthusiastic about what's happening in 2020, and we are definitely very cautiously optimistic about 2021.
Thank you. The next question, can the management please provide comments with regard to path to profitability as the company has already hit profitability in terms of adjusted EBITDA? What is the profit outlook for the next 3 to 5 years?
Okay. Over here at Razer, we are very clear about the path, our strategic direction. And one of the key things about profitability is about execution. As I mentioned in our last update, we actually lay out the plan and the path towards profitability. And we actually executed and delivered the results for the adjusted EBITDA profitable. And we continue to see our profit margin improving. In terms of GPM percentage, as we mentioned earlier, with the freight cost being normalized and the actions that were taken internally, we do expect GPM to improve, and with the services segment growing hyper-growth speed, this will actually help the GPM. And importantly, we will continue to maintain our OPEX as a percentage of revenue discipline. We actually stay focused, and with this, actually our profitability will actually improve. And we actually do see a clear path towards this profitability as we continue.
So maybe I'd just like to weigh in a little bit more to add on to what Chong Neng has mentioned. For the analysts or the investors who have joined earlier calls, I think I've actually mentioned this before. Our core business is incredibly profitable. All right, it allows us to drive a lot of gross profits, and from the gross profits, we then invest in these new categories. Now, bear in mind that if you look at Razer as a company, we have this massive asset, which is the brand. And the brand for Razer allows us to enter into new categories, right? New categories where from hardware, we've gone into things like systems, and then now we've gone into things like services, really high margin services. Now, when we say that we are unique in this sense, it really is because we use this really profitable core to allow us to put R&D, get the best talent, get the best people to invest in all these new categories, and we are able to expand very, very quickly. So if you look at our numbers, we traditionally don't burn a lot of capital compared to most of the other companies out there or tech startups out there. Why? Because we've got this massive profit engine that helps us propel into these new categories. Now, of course, we're not going to be hitting everything right from all the time, but more often than not, we're able to continue having significant scale, consistent growth year on year, and expansion into new categories for ourselves. All right, back to you.
Thank you. The next question relates to the banking business. How much of the capital allocation of the 500 million cash are you planning for this business, given now the ambitions are also international? Since this is a capital-heavy business, it is somewhat concerning still for us as investors.
Thank you. This is Liang. I'll take the question. So just to address that, I think number one, just really coming off what Min said, if you look at our fintech business today, the fintech business really has, if you really split it into two key parts, there's the B2B side and there's the B2C side. The B2B side has really driven the total payment volume for us, revenues, etc. So if you look at that, we have what we would say the stable, the cash flow that has been really driving the ambitions and all that as we look to push out the to C side, which is our Razer Pay e-wallet, and eventually into the bank. So at this point in time, the Razer fintech business over the last couple of years, as we've seen the growth, it has really been driven by internal generated cash flow. We have not raised any external funding to this point. The business continues to grow very strongly. Clearly, we are aware that as we, if and when we do get the Singapore digital banking license, for example, there will be certain elements of investments to be made. We have obviously, in preparation of that, used the 4 or 5 months of preparation to bring on board, as I mentioned, consortium partners who have committed to invest, to bring in their ecosystem, to really shorten, number one, the ability for us to go live. Number two, fundraising at the bank level will not just be funded entirely by Razer Fintech. I think in our press release earlier this year about it, we said that Razer Fintech will take 60% of that consortium and the rest will be supported by the other partners. I think there are also other comments out there that maybe questions I can address. Where are we in the process? I think MAS came out about a month and a half ago, basically saying that while they were looking at announcing the awardees by the middle of the year due to COVID-19 and obviously the impact in the Singapore economy and all that, the decision is now delayed to the second half of this year, probably later part of this year. So we are still pending that. In terms of other regions, just so I can take a few of those questions at the same time, we are obviously from Razer Fintech, a business that has very strong presence in Southeast Asia. So we're obviously looking at that, but with our vision of building this globally, we are also being approached and are in talks with strategic partners who will let us enter new geographies, not just in Southeast Asia, but the rest of the world. Thank you.
Thank you. The next question. Laptop saw strong recovery in May and June. Are you expecting the double-digit year-on-year growth to sustain into second half of 2020? Are you seeing component shortage or logistic issues?
So I'll take the question, I think, in terms of the laptop. So to provide a bit of a snapshot of the first half of the year, for our hardware business, the first quarter was really challenging. Remember, I think when the pandemic hit, it hit China first, and there was a huge amount of supply shortage in the first quarter, and we saw a very challenging first quarter in the sense that we weren't able to get any of our hardware out of China at that point of time. Supply chain was down, the factories were all down, so on and so forth. But we've acted very quickly, and we've seen a lot of the recovery really happen. So if you look at our first half numbers, a lot of it is actually driven in the second quarter. And I think we've seen that huge growth in terms of both peripherals and in terms of systems. And we do see that a lot of it is being sustained through through quarter three and hopefully through the course of the full year. So we remain, I think, very cautiously optimistic that you'll see the outsized revenue growth continue in the second half of 2020 and, of course, for the full year 2020.
Thank you. The next question. Could you explain how the company would seize the opportunity of cloud gaming, especially from the software and services perspective?
Sure. So I think that's a really great question. We see cloud gaming as a new category by itself. We've got today, if you take a step back and you look at the entire gaming industry, we've got PC gaming, we've got console gaming, we've got mobile gaming, and now we see cloud gaming as an all-new vertical. Now, how do we take advantage of it? Is essentially we look at it also from a holistic ecosystem angle. Let's take hardware, for example, first. We launched the Razer Kishi, I think, earlier this year at CES, and it kind of swept the world. It won the best of CES. There was a huge amount of excitement. We just launched the Razer Kishi Xbox version together with Xbox as a mobile cloud controller. Now, bear in mind, xCloud or Xbox's version of cloud gaming, we are very excited about that. This provides the entry point, I think, in respect of being able to play cloud-enabled games, but with the right user interface together with the game that was developed for it. And over and above, I think if you look at some of the new advances, things like 5G, what is 5G going to be great for? High bandwidth, low latency. Cloud gaming is one of the number one, if not the top consumer kind of activity that can be used for the new standard. Now, how do we monetize? I think over and above, well, we will be bringing a lot of the game companies to be able to recommend games and provide 100 million users across multiple cloud gaming platforms, I think you'll also see that you'll need to find a way to pay for microtransactions. You'll need to find a way to monetize or help the gamers pay in terms from a cloud gaming perspective. And that's where things like Razer Gold and Razer FinTech will be able to do. I think in a single line, we are incredibly excited about cloud gaming. We think it's going to be a massive kind of a catalyst for the industry growth in the near future. Thank you.
Thank you. The next question. Given the company's strong pile of cash, can you please give us some color on the upcoming acquisition targets when expanding the overall Razer ecosystem?
I'll take that, and Liang, feel free to chime in if you've got any questions. So in short, as I've mentioned, we're kind of a unique company because there are gaming companies out there that look at content, right? They have a certain amount of games, and it tends to be a hit or miss kind of driven business. For Razer, the way that we see ourselves as an ecosystem, and we are that layer between the game companies, and we partner many of them. We're great friends with all of them, and the gamers globally. And what we want to do is to provide the very best experience to them. And to provide the very best experience, we go back to the ecosystem again. So from an M&A or an investment perspective, we will be looking at things like hardware companies that can provide the additional advantage. We look at talent, and that's one of the things that we've regularly done at Razer. We tend to acquire great talent, and then we build products, from the Razer way, where we really look at pushing the envelope of great technologies, thermals, electronic engineering, mechanical engineering, things like that. So hardware is definitely one area we look at. Now, software, we look at it as an engagement with the user. Now, most hardware companies are terrible in terms of software. What we do is that we get some of the top software developers, create the platform, and Cortex is a good example. Razer Cortex is one of the best game launchers in the world right now, and we have developers really focused in terms of creating that relationship with the user, and we have a huge amount of information that allows us to design better product. We will be looking at investing or acquiring other software companies that can allow us to provide a better experience. Now, services, definitely, that's going to be one of the things that we will do, and one of the services companies that we acquired about 2 or 3 years ago would be like MOL, and that has done incredibly well for us. You can see it's really grown our services business, and it continues to go from strength to strength. And I believe, of course, from a fintech angle, we will be looking at a lot more investment and acquisition targets, whether it's in near term or long term.
Thank you. In the interest of time, we'll take 2 more questions. The next question, can the management please comment on the recent fallout between Epic and Apple? Do you think this is a broader trend for gaming companies to bypass app stores? What would be the impact to our Razer Gold business?
I'll take the question. While I wouldn't, I think, comment specifically about what's going on between Epic and Apple, I think what it kind of represents is that there are a lot of great developers and publishers and who've got a lot of great content. It's always, as I've mentioned and it's a good segue, I think, over here, that the content owners or the content creators are always looking for 2 things. They are looking for, number 1, new channels or platforms to reach the gamer. And that's where you've got the app stores, whether it's Play Store or whether it's the Apple App Store ecosystem, or whether it's Steam or Epic's Game Store. All content creators want to find new channels, right, to reach the user. And secondly, they want to find different ways of which they can find payment methods, whether it's credit cards or whether it's Razer Gold or multiple ways. And all of this bodes very well for us as a company, because for us, we work with all content creators. We want to provide them the access to the users. And we've got 100 million users at this point of time. And many of them are hardcore gamers. They are incredibly passionate about Razer, and they're incredibly passionate about gaming. And this is a great step for us, I think, as a payment platform and as Razer Gold, because we're seeing so many game companies come to us. We've got 33,000 different titles. Imagine that. One virtual credit, you can pay for 33,000 different titles. We've got 4 million touch points, in which gamers can now pay for microtransactions and stuff like that. So all in all, I think, in the long term, this is a trend that bodes incredibly well for us.
And the final question, does the company see any normalization activity across hardware, software, and services as economies start to reopen?
If you look at the current trend, we actually see that the activities, the growth continue. And importantly, it's the way we run our business. That is, we focus on our product, our user base expansion, and market share gain. So with this, we're actually nicely positioned when the market opens up. So we do see a continuous improvement in our growth as the market opens.
So maybe I'll add on a little bit over here, and I alluded to it in one of the questions earlier. If you ask a hardware company that, they probably wouldn't have an idea. Now, if you ask us why we are able to provide a very educated answer is because we can literally see what happens when some of the economies or countries open up or, open up, regular activity outside of a lockdown. And case in point is that we've been tracking and looking at some of the countries where we've seen outsized gaming activity on our software platform during the lockdowns. And then post the lockdowns, we have been monitoring to see, is this going to be the new norm? Does it dip? Does it come down dramatically after a country opens up and stuff like that? And the curious thing is this. Now, of course, there's a little bit of a dip, but we've seen that overall gaming activity still remains very high, even after certain countries have opened up. And what this really means is that people are still cautious. People are still careful in terms of the activities that they do. And more importantly, the new norm of digital entertainment is here to stay. Gaming is just getting bigger and bigger and continues to be as such. So, we are still very cautiously optimistic about what's happening out there and excited about what's going on. And that's all I have today.
Thank you. So this wraps up our session today. If you wish to check out the earnings materials, please visit our IR website at investor.razer.com. You can also sign up to our newsletter at the newsletter section under Investor Center on our website to stay up to date with our latest happenings. Thank you.
Thank you very much. Bye-bye.